Good morning. It's Friday, February 24th, 2023, and it's about 9:45 a.m. Pacific Standard Time. So, what happened? Okay, so looks like the Dow popped down here. It's getting close. So I drew out these. I've drawn these resistance lines, or I'm sorry, support lines here. There's actually a resistance line here, because now the market's below the line, so it becomes resistance, and this is support. So it's in this area. I think this is a pretty good zone right here, as far as once this Dow breaks down into this area, it's pretty much going to free fall down here. Now that's if the market continues in the bear market, environment, which I believe we're still in. So, and then the same with the ES. I drew these lines here. And the ES, there's different support and resistance lines. Why should you say support? Because the market's coming down. Here's another one down here. But, I'll draw these in as the market starts coming down. But for now, it looks like, if this market starts heading down into this area, we're probably going to be looking for a pretty sizable bounce, maybe back up, maybe like this one. This one came down here, or you can just say it came down here, it bounced, it came down here, and it bounced really big. But after a few days, it went back down. So we're always going to get a bounce. So far, we haven't had a bounce on this. This looks like it was almost going to be a retracement, but it didn't, and then it broke down. And then now it might just wind up in this area before it bounces again. Or that would be the first bounce, actually. And then that would take it up to maybe up to this line and then down. So why is that important? So if you had purchased options even up in here, this area, and the market came down, well, let's say you bought them here, and the market came down after, let's say, 2 weeks, and then it bounced all the way back up to here, you're back to break even. So that's the thing about any kind of investment, stocks or options. You come back to break even. Options, you're probably going to be less than break even because there's a time value, and it really depreciates as time goes on, getting closer to your expiration date. But then you're back to where you were. But if you're in longer term, and then you just ride it, you think it's going to come all the way down to here, then you just keep riding it. Of course, you're going to make some good money by the time it hits bottom. That's the thing about this market. You have to know almost where the market's going before it goes there. For me, I'm estimating here that this is the top, and we're on our way down to here. And maybe by April we'll hit bottom, or maybe even sooner, maybe by mid-March. But that's just an estimate. Of course, the market could hit and turn around and go back up. But again, I don't see that happening because we're in a bear market, and everything out there looks pretty bleak. I mean, the economy is not really strong at all. They say interest rates are at whatever, 7-9%, but they're not. They're at 19% because they're discounting food and energy. And when you add food and energy, now you're up to 19%. So that's probably closer to being realistic about inflation. That's pretty high. So anyway, what happened today? The market shot down. I heard there was some kind of news on, I'm not sure, I don't know if it was CPI, but like I said, I don't really listen to the news. You can see it's a pretty plain chart. There's no indicators. I don't have any moving averages, EMA. I don't have nothing down here. Volume, stochastic, MCD, or whatever that's called, MACD. I don't have any of that. I used to, but I got rid of all of that. So I don't need it. I just look at the charts. So the only thing I know is this thing's going down. and that's it. You know, if there's news reports and it bounces around, well, that's fine. You know, it might delay it a little bit, but it's still going down. So I don't need to look at that. If you're a day trader, it's a good idea to look at that, because that's going to make a difference within, you know, minutes to an hour on where this market's going. But I'm not a day trader anymore, so I'm more of a swing trader. You know, I'm in for a couple weeks. And you know, you could hold some longer positions for 1 or 2 months. Yeah. So anyway, so that's let's see what the Nasdaq's doing. Nasdaq's pretty much mimicking the S&P. You know, it's coming down. Let's see where the Russell's at. Russell, same thing. You know, it's coming down, so you just got to be patient with that. Now the VIX, you can see the VIX is kind of an indicator. I mentioned this before. You know, it starts coming down as the market goes up, and as the market goes down, it starts coming up. So by the time we get to the very bottom, you know, this should be way up in here, way up in there, and then you'll see that we're getting even further up, that we're getting close to a bottom. So at least that's what I believe, just from all my years of experience. So gold, I really like gold because gold is super cheap right now. This is the GLD, super cheap. And right now, banks, large institutions are just piling on gold. They're just buying a lot of gold. So you know this is going to just take off. I mean, big. Let's see, I'm already at a max. Okay, let's say negative. So where's gold going to go? I mean, you know, gold can go way up in here. You know, here's 200, it could go to 500, it could go 1,000. It's just going to take off really big. Now that's if we're going into a big recession and if the market continues down, which I believe that's what's going to happen. So why is gold so low like this? I don't know. I mean, you know, like I said before, a lot of this is controlled, and maybe they're just bringing this thing down, and the cheaper it gets, the more they're going to buy, and it's just going to bring this thing back up. So here's another good investment here, and you can trade options, but if I'm going to trade options on this, I'm going to trade longer term and just stay with it. I'm not a long-term investor, but in something like gold, this would be probably equivalent to a new bull market starting in the stock market, which, you know, bull markets can last anywhere from 5 to 10 years and even longer, like this last one. So yeah, you can ride this up for a year. See what else we got here. Yeah, I think that's about it. So anyway, the Dow went from here to here and hasn't retraced yet. And like I said, once it breaks this point and it goes into this zone here, I think we're going to do some free falling right here, and that's going to bring the rest of the markets down. So right now it's at a critical point, and like I said, once it breaks this line and comes down here and it stays, it's going to continue down. Okay, back to the ES. So anyway, this is where we're at, beginning of the year of last year, and then we wound up right here, and eventually we're going to come down into this area. And like I said, it's just my estimate, just what I'm looking at, just based from my experience, my 24 years experience. How long that's going to take, I don't know, but I think most of this is going to happen this year, maybe even somewhere around June, a little past June. We're probably going to start getting some pretty big hits down here. So if you're buying put options, you can make some really good money quickly when the market starts hitting those big drops like this. Okay, so anyway, the idea of this whole channel is so not that you can make millions of dollars, you can, but just so there's so many people losing their jobs right now. Pretty soon they're going to be losing. Well, there's record number of foreclosures too, so people are losing their homes too. FDIC had a meeting about bail-ins, so they're going to start keeping your money in the bank. It means your deposits, that they can actually take it away from you. And pension funds are going to disappear. So same story as 2008, except more of an extreme this time, because the government's not going to step in and bail out the banks this time. The banks are going to have bail-ins, which means their clients that are customers, their depositors, I should say, are the ones that are going to bail them out. And that's the average person, which has money in the bank, has money in their pension funds, they have it in CDs, whatever they're invested in. And even if you don't, you think you're not invested and you just have cash in a bank, like $250,000, they can take that. So the reason why I'm doing this is so this way you have a job, not only a job, but you can have some free time and you can make some pretty good money on this. There's no limit to how much you can make on this. I was watching a guy on YouTube yesterday, and he's young, he's in his 20s, and I'm sure he's making several $1,000,000 day trading. And I was watching some of his videos, and he actually knows what he's talking about. He's really good. And so, you have a choice here. You can make, $10,000 a year, you can make $100,000 a year, you can make $1,000,000 a year, and not be stuck by the computer the whole day. Just basically, like right now, I'm pretty much done. There's nothing else to do. I'm just being patient as this market goes down. There's a little bit more because, like, for me, I'm a different kind of trader, and I might sell in here and wait till it rebounds and buy back in here, buy the dips, what they call, but it's a retracement, and then come down. Then this way I can make twice the money. But that's not an easy game to play, and I would not do that if I were you until you have some experience. But the point is, you can make a decent living doing this, and the markets will never go away. They're always going to be here. People lose their houses, their pensions, all that. It goes away, and it never comes back. But with this market's always going to be here. And nobody can fire you from your job. It's something that you're doing on your own, 100%. Okay, so that's it. It's Friday. We're going to wait till see what happens on Monday. I have a feeling that March is going to be a down month, mostly going down, all of March probably. And so we'll see what happens, but expect little retracements here and there on the way down, and that's it. So I'll talk to you guys on Monday. I just want to mention one more thing. I don't mean to scare people by telling them that all this stuff, possibility of this stuff happening, the bail-ins, people's pension funds, just basically keep you informed. See, I'm not afraid of what this market's going to do because I'm trading it down as it goes down, and as it goes up, I trade it up. So to me, it doesn't really matter. But to the average person that doesn't know about this, to have their life savings taken away, it's not a good feeling. That's happened to me, at least twice in my lifetime. Not trading in stocks, but just in businesses that I've owned and lost. So I know what that feels like, but basically I'm just trying to help maybe educate you a little bit, but do your own research, of course. Just don't depend on me, and whatever I'm telling you might not be right for you. But as far as my trading style, so you got to find your own trading style. You got to find your way of doing things. So I encourage you to do that, and do your own research, like I said, and just come up with your own decisions. Don't rely on somebody else 100%. With me, what you see here, you can just maybe take some tidbits from here and say, yeah, this works for me, and then develop your own system. All right, so that's it. Like I said, I didn't want to scare you. Want to just keep you informed. This can be a big opportunity for you, as opposed to not knowing about this and losing everything. So I would think this is a good thing. Okay, talk to you guys on Monday.